to the closing beat. Happy Tuesday. How you doing out there? Hope you're having a good day here to start. Well, I have to finish, actually, because the day is over. We're financial advisors here at Jazz Wealth. We put this show together every day. Well, honestly, it's marketing, right? If I'm in front of you every day and then you need to do something with your IRA or your Roth, or you leave your job and you got to roll over your 401k, Jazz Wealth, right? So I'm here to just help, try to teach you something new. This class is also for our customers to update on the overall market, those that like to participate. We also do classes once a week for our customers, and this Thursday we're going to do a full review. Grab a big glass to join us for our Wine and Wealth class for customers. Thursday night at 8 o'clock, we're going to go over, obviously, the markets and how they've done, expectations going forward, and if I have my way, as I usually do because I own the place, lots of geeky stats and details in there for you, so no matter what you have an idea of what to expect going forward. We're also playing a game. It's called Guess the Dow. Go to jazzwealth.com/guess the Dow. You're happy to, feel free to take a guess there, whether you're a customer or not. If you're the closest without going over, we'll send you a $100 gift card. One of our customers was the winner last Friday. Mr. Don G was the winner. We credit his account $100. You can take a gift card if you are a customer, or you can have your account credited. And if you're not a customer, we'll just send you a gift card. There's no marketing or anything in there to mess around with. And I'm done messing around with comments here. Let's start with the market. You got the Dow higher by 31, 1 point on the S&P, and the NASDAQ gave you 9 whole points on the day. Let's take a look here as the S&P on the screen felt a little weaker today. Gonna be honest with you, every rally throughout the day or intraday saw selling pressure. So every time the market would get beat down just a little bit, I mean, we're talking a small range here, but every time it would get beaten down a little bit, you'd see a little bit of any little bit of a rally, you saw it get beaten down. So you can start here at the beginning of the day. We started with a little rally, beaten down. As we go into the mid-morning into lunch, little rally, beaten down. No real attempt throughout the rest of the day. And actually, this is the close. After hours, the markets have sold off a little bit. That's going to be FedEx. We'll cover FedEx here in just a little bit. Nonetheless, that still works out to be a new record close here. So the market's just plugging along, got plenty of room should they decide to pull back. However, the year's pretty much over. Like we said before, when you look at the NASDAQ, you've got really nothing in terms of earnings to go on there. When you look at the S&P, nothing in terms of earnings. The Dow, same thing. You got very little in the way of economic news going on out there. You've got no Fed announcements. They're out there talking. There's 2 Fed speakers tomorrow. There were 3 today, but all in all, there's really just kind of a low volume, low volatility environment as we eke into the Christmas, New Year's holiday. Markets tend to get really quiet. So unless there's some news that we just don't see, that's not scheduled or anything, you pretty much expect the markets to sort of flounder around near highs, which I don't think anybody's really complaining, unless you're hoping for the markets to fall. And then if you are, well, that's what it is. We still had some econ number come out today. We had a couple, actually, but we had housing starts and building permits. I don't usually focus too much on these numbers, but we're going to do it today. Here's why, because there's a couple things you're going to want to know. Let's look over here. We've got housing starts higher on the day. They beat by on the month. They beat by 20,000 overall, so looking good there. We take out housing starts and we look at building permits. Building permits beat by 72,000. Good news there if you're in that category or investing in that category. That's 5 months in a row that we've had a beat versus expectations. You look back, how far can we go back? We can go way back. Here we go. For building permits here, last time we beat 5 months in a row was 2012, so a good little bit of momentum there. And building permits tend to lead housing starts, naturally. You get the permit, you build the house, right? So they tend to be a leading indicator. I'm going to focus on this here just for a little bit. We're now back as high as we were. Can you see that? Oh, you can see it today. We're back as high as we were going back to 2007. If you happen to just kind of take a look and see where we're at relative to today. They're going back into 2007 before the recession there. Now, going back to housing starts real quick, I pointed this out last month. I'll do it every month if I can. Housing starts are always declining ahead of a recession. There's never been an instance where they have not been. So here's an example. Declining ahead of a recession, declining ahead of a recession. Here you go, a big decline going into that recession. The last one and the second to last one and the one after that. So it's kind of a fun thing to look at. If you see housing starts starting to roll over and they're starting to make new lower lows, which they're currently not, that gives you an indication things are just getting weak overall. What I wanted to do real quick is just show you the correlation here to the home builders. So on the charts, I've got housing starts, building permits, and we've got the home builders ETF ITB. If you want to take a look at that, that's a pure play in the home building category. Obviously very correlated to housing starts and housing building permits as well. So something you want keep in mind there. If you're in that category, maybe it's an economic number that you want to check out every month or so. So I hope that helps. Just a quick little thing to go over there. I've got a whole handful of things we could go over today and have some fun if you'd like. I'll go through the bulk of everything that we like to do, and then we'll see how you feel. Let's see what's going on there. Let's do our sector breakdown here. Take a look at the overall sectors of the S&P 500 and a little bit more. You got financials looking good today. Small gain on the day. Also, regional banks did well. They were better, up 1%. That's that recent breakout that we've been talking about. So when you look at banks, you can break them down into subcategories. You've got your big financial, they call them money center, global money center banks, your Goldman Sachs, Bank of America, Wells Fargo, Morgan Stanley, Citigroup, JP Morgan, things like that. And then you got your regional banks as well. So a lot of times I like to look at those as well just to see sort of financials as a whole, which also starts to include insurers and things like that. So regional banks did well today. That's very good news for that part of the market. Oil moved back into this top of the range there. We've been talking about that. Very strong, consistent uptrend, we'll say, although a little bit volatile. Lately, it's smoothed out a little bit, but it's in the middle of sort of a rising ceiling, if you will. And so you saw that's exactly where it stopped today before pulling back. Nonetheless, oil looking pretty good there, which is good news for you XOP players. I hear you. I've seen the comments and the emails there. XOP, very consistent little bounce off of lows, moving into these prior highs of about 23, 25 in there. So if you like the idea of the oil explorers moving, or you tried to pick the bottom there, it's not bad. It's looking pretty good. I'll jump over real quick to commodities because that sticks out. You could use the DBC for commodities. This includes everything in the mix there, back to 5-month highs. You got to go all the way back to the summertime to see when they move back to highs. If you were to break down this ETF or commodities as a whole relative to this ETF, you'd find about 25% of it has to do with either Brent crude or West Texas Intermediate. And so they're obviously have done well. That's helping support this overall there. Interestingly, can I go? Yeah, heating oil. So heating oil has been on a bit of a tear too. We don't really talk about that, but when I was looking through the commodities just to see what was hot, you've got heating oil makes up about 12% of the DBC. Nice and strong here over the last few days, adding another 1% on the day, if that helps you. So that is the direct price of heating oil. Industrial is a little bit weak on the day. That's going to be Boeing and FedEx again. After hours, FedEx has taken a bit of a hit for their earnings. Boeing and FedEx, just like I said yesterday, make up 9-ish% of the XLI. So industrials, you're in that category, you expect probably to see a little weakness going into tomorrow as well. REITs not looking good here. So REITs continue to flirt with these lows. So they tried to bounce the other day. Today's reversal day makes technical traders think, okay, that's not the bottom. There's going to be more downside there. So if rates keep moving a little bit higher as they are, you might expect REITs to continue to pull back. You got maybe a little bit of a floor around the 111.50 area in here. So anything below that, you'd sort of expect more profit taking going into the end of the year. Just what I'm watching. I'm not telling you what to do or anything. You could also use the XLRE. There's a lot of popular REIT ETFs out there that sort of specialize in their own little categories. So of course, do your research before you make any significant moves there. Gold basically flat on the day, but gold had a pretty good year. If we're starting to look at some of the areas of the markets that had a good year, I'll guide you back towards yesterday's video, Where to Invest in 2020. We covered all sorts of different areas of the market. Lots of great geeky stats in there. So if you go to our YouTube channel and look at the last video that we uploaded, really great video in terms of looking at the data of the indices, the individual sectors, individual stocks and stuff, just breaking it down for you so you have at least maybe a sort of a guiding nudge where you might want to look into the new year or see what to expect in terms of volatility and things like that. Kind of went crazy on that one. I do apologize, but seems to be getting good feedback. I like it. Anyways, gold was one of the better had a good year, as all I really wanted to say there. Up about 14% year to date, which is good. 14% for gold is really good because I sort of tease gold investors every now and then for not having a really strong performing asset that they're investing in. If you look over the last 5 years, the average performance is 3.66% a year. So it's very low returns for gold. Now, granted, there could be some sort of chaos, and that's what you're banking on there, but not looking good. If you look back 10 years, 2.29%, and the 30-year average, assuming you bet your entire retirement, all these years you invested in gold, your average return yearly is 4.23%. So it really starts to highlight how gold did well. I mean, had a great year here so far. We'll cover commodities more here in just a little bit. I want to dive into some of this for you just to give you an idea of how they've performed as well. Might try to highlight that in our class on Thursday as well. But that basically wraps up our sector breakdown. Let's take a look at some individual stocks here. Boeing officially cutting production of the 737 MAX, which is unfortunate. That's, you know, it's their highest selling plane there. Now, interesting thing, I saw JP Morgan put out a note that this is actually going to have an effect on GDP, which I want to point out now, because when those GDP numbers come out and they're lower than expected, it's going to make everybody think recession, recession, recession. And I promise you, Bloomberg or Wall Street Journal, whatever, they're going to focus on the effect that Boeing is having on GDP. They're that big, right? So JP Morgan says expect about a 0.5% hit in the overall GDP numbers, which are currently right around 1.6. I think we're expecting 1.6, and that's it for growth. So to shave a 0.5% off of that, you're looking at a 1% growth rate for the U.S. It's not great, but we'll have to sort of put an asterisk next to that GDP number because of really Boeing. So anyways, they're cutting production there. You want to consider some of the suppliers, right? And I'm just thinking of this off the top of my head. United Technologies, I believe, is a supplier to Boeing, down a 0.5% on the day. Spirit Aero, well, they've already been hit. Spirit Aero Systems, I know, is a big provider to Boeing, so they're going to get hit as well on this news. Down about 3% on the day. Maybe GE. A little bit lower on the day, but GE is kind of hanging in there. So you might want to look, if you're kind of looking for those areas that are discounted, find out where the suppliers are and see how bad they get hit if you want to sort of play the revamp next year for how Boeing recovers, hopefully, out of all of what's going on here. So that's basically what I have to say about that. Bed Bath & Beyond, you got a good spike on that one today, up 11%. They are doing a little reshuffling here. So the CEO has found a way to sort of relieve 6 executive members from the company so that they can make decisions faster. That's always good news for a stock. There's usually a lot of chefs in the kitchen. They've all got different opinions. You know there's a lot going on behind the scenes. Well, they've sort of reshuffled things to make for a faster decision-making process, and we're assuming now that the people that are left over are going to make good decisions. So I don't really have much more to say on that one. Up 11%, so it's good news there if you happen to be participating. Micron Technology is basically flat. I found this one interesting here. So it's basically flat. They report earnings tomorrow after the close. Did a little research here. So they were upgraded, I believe it was Needham, upgraded their price target from 60 to 70. Now, let's go back. So they're at 53. They could have left their price target at 60 and then wait to see how earnings play out because they're way up here. But they chose to go to 70 the day before earnings. Remember what happened when the Bank of America guy did that a couple weeks ago? He was right, and it was on, what was it, Adobe. He nailed it, right? So here you go. You got an analyst saying, okay, they're betting on a $70 price target from 60. They report earnings tomorrow, which I thought was kind of interesting. We looked up the stats here. The stock is only higher 38% of the time the day after earnings. So in this case, that would be Thursday that we'll be talking about there. They're expecting 48 cents a share. Yeah, 48 cents a share in earnings, which is really low, right? So expectations are already really low here. Last quarter, they were expecting 48 cents, and the company beat by 8 cents, right? So looking back, you got to go to December of 2016 to find the last time that they had expectations of 48 cents or lower. So what that tells you is the analyst has basically looked through all of this and said, okay, expectations are really low. Chances are they're going to beat. Even if they're not higher on the day after earnings, they feel pretty good about it because the bar is set pretty low there. So we'll see. We'll follow up with Micron and see what's going on there. I'll quit gabbing about that one. We'll move on. You may have noticed Netflix higher on the day, added about 3% there. So there's a lot of cool software out there that follows SEC filings. You ever notice how they'll say, oh, hey, Warren Buffett added so many shares of this or that? It's all automated. We get them here. You can get the SEC filing, and you can actually look for changes and have it post the results for you, so you don't have to read through everything. Pretty cool. Anyways, in one of those filings there, they were showing faster growth over in Asia, right? So good news for them in terms of subscriber growth. Maybe that reflects in their next earnings. Well, we're all assuming it does. So the stock was higher by almost 4% on the day. Not bad for Netflix. I know some of you have been playing around with that one. Good for you. Eli Lilly up 2% on the day. They raised their guidance for 2020. The CEO had a lot of great things to say, really. I could probably read off a whole bunch of it, but he basically said that this company is entering a new period of prolonged growth. That was an issue. It was a concern for them last year because they lost I don't want to say it. They lost Cialis, right? So Cialis was one of their drugs, went off patent, so now there's a lot of generics out there. And that was 5% of their revenues at the time. So that was a big deal. Everybody was thinking, okay, crap, what's going to happen? Well, the company is about 50%. I think it's 46, 44%, somewhere in there, of the revenues that they make is all new drugs. So you're losing one, that was 5% of your revenues. You get to look forward. You better have some good stuff in the pipeline or see some of your newer drugs starting to generate more revenue. Otherwise, hey, that's half your revenue. Give us a good reason to continue to invest in the stock. So anyways, you got, what was it, Trulicity and Taltz. They've got revenue growth around like 50% or so. So I don't really like looking into these stocks, so I just briefly review this stuff. But so you've got good growth out of Trulicity and Taltz, I believe was the other one there. So that's helpful. And, you know, they raised their dividend as well, up to 74 cents. That's 15% increase there. And the CEO had a lot of great things to say. So you got Eli Lilly looking a little bit higher on the day. Hope that helps you there. All right, you got 74.5% of the S&P 500 above the 50-day moving average. That is officially, that's a high. That's a recent high here, going back almost 2 months now. So looking good there. We're creeping back to highs on those. Now, you've got, remember yesterday I said you had 24 names that were within 5% of, or were 5% or more below their 50-day moving average. And the charts didn't work, but today I want to show you, I want to illustrate something. So for example, Twitter. Here's the blue line, that's the 50-day moving average. You've got more than a 5% gap between where that is and where the price of Twitter is. We covered a couple others as well. Well, today that number went to 28. Can anybody guess why that number went up and is going up day by day? I don't just like point stats out just for fun, but anybody guess why that number of stocks is becoming more, that are falling more away from their 50-day moving average? And I'll just give you the answer. It's tax loss, right? So you've got a lot of people looking at the weaker stocks in their portfolios, mutual fund managers, hedge funds, all these people, looking at the weaker stocks in their portfolios, and they're going, okay, I'll just sell those, right? I'll take the tax loss. See, they have different rules than you do, right? We've been talking about this. You can only sell off $3,000 and lock in a max taxable loss of $3,000. They don't play by those rules. They can do whatever they want. Anyways, you got the money moving out of the weaker areas, stocks well below their 50-day moving average, and then being placed into the stronger areas of the market. Been mentioning that here for a few weeks here, and that's one way that you can look at it. So if you want to set a scan and say, okay, how many stocks are far away from the 50-day, and is that number growing or declining, gives you an idea there. Okay, moving on. You got 47 stocks at new 52-week highs. Here's a couple notable names for you here. Southwestern Energy, ticker symbol SO, reverse course very sharply, back to new highs here. Looking really good there. Also, they pay a 3.98% dividend. Well, the yield is 3.98% at the moment, so looking pretty good there. Target's waking back up again after the earnings gap and moved back to 52-week highs. Not too bad there. And I mentioned the financials. They did well. Goldman Sachs got an upgrade today. And so they were higher. The regional banks here, you've got KeyCorp, PNC Bank, Citigroup. These all hit 52-week highs. And Verizon would be a notable one as well, breaking above the highs in a more convincing way with a little higher volume. So if you're looking at Verizon or you own it, then everything's looking good there for you. You got no new 52-week lows, so nothing new to cover there. Everything's looking good there. So let's move on to some other stuff, and then I'll take your questions if you like. Commodities. All right, so if you're investing in commodities as a whole, I talked about that a minute ago, showed the DBC as one of the ETFs that you can look at. They've been really strong. So here's the new move here, back to 5-month highs. Commodities, if you had to decide to invest in commodities or the stock market, what would be better, right? What would be the better results there? And the idea was I was going to make this into a bigger study, and we're going to do a big thing, but here's the sort of raw data. Commodities beat, over the last 20 years, commodities beat stocks, meaning 100% commodities or 100% stocks. How are you going to invest? They beat 7 times. 3 times that they beat, it was less than a 3% difference or less than a 3% margin of difference there, meaning commodities beat 7 times out of the last 20 years, but 3 of them was just a tiny little gain. So you didn't really miss out on much by doing that. The average beat over those 7 times is 14.04%, and that's largely because of 2 years, 2000 and 2002. So in 2000, there was a gain of, or a spread of 31.1%, meaning if you had invested in stocks In 2000, well, we know, a lot of you know kind of what happened there, but if you'd invested in stocks versus commodities, there was a loss of 31% you could have had by simply shifting over. Not saying you would have, but that was the difference. 2002, it was 38.1%. So really pretty interesting there. Then I thought, okay, let's dig into it here. If you had to choose only one commodity, what was the best performing commodity over the last 20 years? Which commodity has the best track record in terms of the best gains? Nobody's going to guess it. I wouldn't have guessed it either. Lead. Lead is the best performing commodity with an 8.06% gain, followed by tin. Tin comes in second, 7.86%, and gold comes in a very close third at 7.81%. So it gives you an idea of the commodities there. You should always take a look through all of this. I like looking at commodities. I don't know if it's that interesting to you guys, so this was a bit of a test. We'll see how you respond. Okay, a couple other things. The House passes a spending bill, sending it over to the Senate. Lots of interesting things in there. One of them that caught my eye was, I didn't know this was in there, they want to raise the age of being allowed to buy tobacco products to 21 from 18, and that's in the bill. If the Senate passes that, then the minimum age goes to 21. All right, let's talk about FedEx here real quick, because FedEx reported earnings after hours. Not good. Not good. We'll cover it tomorrow as well. The stock closed at 163. It's trading at 152. You want to see on the charts where it's at? 152 is going to be way down here at these prior lows, so expect a gap down tomorrow. As far as the earnings, they missed on revenue. The CEO says, we have experienced higher than expected expenses. Okay, that doesn't sound too rosy. He also said this was a year of great challenges. We are reducing Express Air network and scaling back our hiring going forward. Ouch. So expect that to hurt tomorrow. You already see it starting to hurt the S&P overnight here. And transports, which we talked about a minute ago. FedEx, well, there we go. In the transports there, FedEx makes up about 10%. So you're going to expect to see that sucker gapping down in the morning as well, hurting the transports. It's already gapping down about $5. So all of that because of FedEx. Tomorrow you got General Mills, Paychecks, and Paychecks. Micron Technologies reporting earnings as we said, and on the 23rd you've got a little shift in the S&P 500. Live Nation, Zebra, and something else moving into the S&P, and a couple stocks getting shifted down to the S&P 400 midcap. Okay, I'll try to answer some of your questions there. Karine says, where do you start to invest? First, ask yourself, what are you investing for? Right? That'll help you decide there. What are you actually investing for? Is it retirement? Are you just building your net worth? Do you just like the idea of investing in things? That'll help, and then you can kind of narrow it down from there. Really, it just has to be somewhere you're comfortable with. Everything's basically the same these days, so just look at the software or the user experience of any platform you're considering or any website you're considering, and then go from there. Yeah. Cool. Uh-oh, you like your lead. I think that's funny. Melt up. Yeah, a very common term that's really used there. A melt up is exactly what you're seeing right now, a very slow and non-volatile move higher, meaning there's not a lot of backs and forths along the way. It's just steady, higher, 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 little down day, higher, 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 etc. It's considered a melt up with when you have basically a straight shot with no volatility in the middle. If there's any volatility in an uptrend, it just allows for people to still be on both sides of the fence and be profitable. When you melt up, quote, there's really no chance for people on the other side of that trade to be profitable. They're just stuck. So they call it a melt up. Yep. I love it. Cool. JC, oh, you guys are talking about each other. I love it. You'd like to work with, on your yearly retirement income with you and make sure I'm on track to make it. Should I email with the current 401 positions? We'll always start with the general plan there. So I'm not sure if you got that yet, that questionnaire. I think it should be in your inbox or on the way there if we haven't. We'll start with that just to see where you kind of land. You get a chance to put all your information there. And then I leave it up to customers. If you want to really geek out and go a little bit further, we could do that as well. But let's start with that and see if it's something that shocks you or if it's something you thought was about in line where you're expecting to be. Make all the general adjustments and then go from there. I like it. Do I think the dividend for, so I don't have that in front of me, that ability to look at that. The dividend for NRZ, is that sustainable? I don't know. I'd be guessing at this point. That's that computer back there. Sorry. Send me an email if you like. I'll take a look. Cool. How long do melt-ups last? So that's not really... So melt-up is a very loose term. There's really not an official way to categorize that. And you actually need an official way to define something like a bull market, bear market. We officially define that. Or there's a generally accepted definition, right? That would help you decide that. There's really no definition of a melt-up in terms of gains or volatility or anything. So I don't know of any study that's been done on that. But it's clever. Wow. I love it. I love it. I love it. Hey, I'll wrap it up there and let you guys get back to doing what you do. I appreciate you watching. Thanks for joining us here today. Don't forget to play Guess the Dow if you like. And yeah, thanks for keeping us in mind here at Jazz Wealth. And you just have a great rest of your day. We'll be back tomorrow to do this all over again. Expect a little bit more quiet, although probably to the downside it looks like as of now tomorrow. But if it's a little bit lower volume, a little bit quieter, that's okay. We'll keep going over some stats here and just interesting year-end things and see what we can help you with. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.